Good day, and welcome to Welspun Enterprise Limited Q4 and full year FY20 earnings conference call. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. From the management side, we have Mr. Sandeep Garg, Managing Director and CEO, Mr. Atul Jindal, Group CFO and Head Strategy, Mr. Ved Mani Tiwari, Deputy CEO, Mr. Sridhar Narasimhan, Chief Financial Officer, and Mr. Jitendra Jain, President Finance. We will start with an update from the management for the past quarter and then proceed to the QA session. Thank you. And now I hand the conference call over to the management for the opening comments. Thank you, and over to you, sir.
Thank you. I'm Sandeep Garg, Managing Director. Good day, ladies and gentlemen. On behalf of Welspun Enterprises Limited, I welcome you all for Q4 and full year FY 2020 results analyst call. I hope that you, your family and colleagues are well and taking care and necessary safety measures. On this call, from the management side, in addition to the usual participants, that is myself, Mr. Atul Jindal and Jitendra Jain, whom you are familiar with, we have Mr. Ved Mani Tiwari and Mr. Sridhar Narasimhan, who have recently joined the management team. Mr. Tiwari joins as a Deputy CEO and Mr. Narasimhan as CFO. Both of them come with some impressive experience in infra domain, and I'm sure that your company will be immensely benefited from their expertise. Before we go into the detail of this quarter, let me quickly start with the recent developments, as you would have seen from our recent disclosures. We are in the process of acquiring a boot toll project, namely Mukarwa Chowk Panipat, through harmonious substitution. I will be sharing some more details about it later on. We have also raised rupees 375 crores through NCDs in May 2020 at a very attractive rate, even in this difficult market environment. Both these are very significant steps in our growth journey. You would have also seen that we have announced a dividend of rupees 2 per share yesterday for FY20 to reward our shareholders. Now, coming to the operational performance, without a doubt, this was a very challenging year on the macro front. In spite of that, our revenue in FY20 is up by 1.2% year-on-year basis. Our operating EBITDA margin for FY20 is at 12.2%, in line with our guidance. Coming specifically to Q4 FY20, we reported a revenue of 450 crores. The revenue during the quarter was adversely affected due to a few major factors. We faced some unseasonal rains across our 5 project sites and lost approximately 55 working days cumulatively, which is about 12.5% of the golden period of working time for the quarter. In addition to this, the world and the country faced the challenge of COVID, which also led to a loss of about 9 days for the quarter which is about 10% of the working time of the quarter, effectively making us lose almost 25% of the golden time to work. In addition to that, there have been some minor delays on some routine forest matters, which we were supposed to get some approvals, which would have allowed us to generate more revenue. Those files got delayed, and we could not generate that revenue in Q4FY20. Overall impact of these would be in the range of 225 to 250 crores, which we believe that we will be able to recover in the Q2 to Q4 of FY21. To protect the company from costs and attendant issues because of this lockdown, we have written to the authorities invoking force majeure, which ensures that the interest of the company is protected under the concession agreement. I would also want to update you on the COVID-19 impacts and its implications. So as far as COVID-19 is concerned, post partial opening of lockdown from 14th April onwards to about to about 22nd of April, we started work at our various project sites in accordance with the government guidelines. We expect the pace of the work to gather momentum gradually and are confident of making up the revenue loss we have incurred in April and continue to do so because of slow progress over the next 11 months. We have adopted several measures across our sites and offices to ensure that our commitment to our customers is not compromised. We have implemented work from home for employees and their safety and well-being. Extreme caution and higher standards of hygiene and safety is being practiced at our sites by our staff. In order to create awareness and protect our employees, additional efforts have been implemented, such as thermal screening at all our offices and sites, following social distancing norms, sanitization measures for employees and officers, medical assistance. These are some of the major elements that we have covered. There is a detailed SOP that we have prepared to protect our employees and workers from this COVID-19 dispersal. Now, coming to our project updates on our road portfolio. Just to recollect, most of you know that we have currently 7 HAM projects of total value of more than 8,500 crores. In addition, we are currently in process of acquiring a BOOT project with a value of about 2,100 crores. The current order book, which is unexecuted portion, stands at approximately 4,862 crores, which gives revenue visibility for FY21 and FY22. Now, coming to specific projects, Delhi-Meerut Expressway Package 1. It is a completed project and it has received its third annuity in January 2020 within the stipulated time of concession. The project was also refinanced at a very fine rate of 8.17% with a top-up loan of 65 crores in these challenging circumstances. The next project is Kagalheri Saharanpur Yamunanagar or GSY project. The physical progress of the project stands at 91%, and at the end of Q4 FY20. The project has met its fifth milestone and has received the payment against it in March 2020. The adjoining project to it is Chitmalpur, Ganeshwar and Rohki Chitmalpur Kali called CGRG. The physical progress of this project at the end of the Q4 FY20 stood at 89%. However, we have progressed there beyond, and we have put in the fifth milestone, which is 90% post the lockdown, and part payment against that has also been received. Chikli Tarswa, a project in Maharashtra. The physical progress of the project is about 60% at the end of Q4 FY20. We have invoiced the third milestone and also received the payment against it. The PW project at Maharashtra, Amravati, called AM2. The physical progress of the project stands at 54% at the end of Q4 FY20. We have invoiced the third milestone for this project and received a part payment from the client. Next project that I would want to talk about is Anta Simaria. The physical progress of this project stands at 21.8%. For this, we have invoiced the first milestone and received payment against it. The last project that I would want to talk about from the HAM portfolio is Satanathapuram Nagapattinam. As I have explained in the earlier call, NHAI has been advised to do an environmental study. NHAI is currently undertaking an EIA study to obtain environmental clearance. The concession agreement is intact. In fact, a supplementary agreement has been signed, extending the validity of the concession agreement up to 30th June 2020. For this project, there is the implication of the environmental CRZ clearance is only to the extent of about 650 meters, which we believe, if all other things are settled, all other preconditions are met by NHAI, we can easily de-scope it and get the appointed date. We are targeting the appointed date before 30th of June 2020, and NHAI is currently working to meet its obligations under the CPs so that the appointed date can be granted before 30th June 2020. The last project that I would want to talk about is the recent project that we are acquiring, that is Panipat Mukarba Chowk. It's a toll project. We are acquiring it from SL Group. The total project cost is about 2,122 crores, out of which 1,593 crores is balanced to be incurred to complete the project. The project is fully financially tied up and adds around more than 1,100 crores to the EPC order book of the company. We expect to complete the project in H1 of FY22. Coming to infra projects for the water, the Devas water project, it achieved its commercial operation date as on 30th of April 2019. Since then, It has been operational and it has stayed operational as essential services during the COVID situation. We have generated a revenue of 7.9 crores and an EBITDA of 3.6 crores during the year. Coming to oil and gas, there are 4 relevant blocks. Touch block, or GK1 as we say. The operator for this block is ONGC and is in process of developing the field development plan. The second block that we talk about is Mumbai Block, and it is already the approval for entry into phase 2 has been achieved by us, and we expect the drilling to start post monsoon. The last block that I would want to talk about is B9, which is a discovered small field. After the drilling in the Mumbai Block for the first well, we intend drilling post monsoon the developmental well in B9. In these 3 fields, the overall gas in play is in the range of 0.9 TCF, that is trillion cubic feet. This gas initially in place has been reviewed by a peer group, and they have actually come up with a higher number. The expected EOR from this gas block is about 70% of the gas in place. The fourth block, which we are still holding on to, is Palej block. That block continues to be under litigation. And since it's an oil-bearing block, we are continuing with that. And also trying to have discussions with the government authorities to revive it. So coming to the outlook of road projects, currently there are around 42 HAM projects announced by NHAI with a total project cost of about 42,000 crores. The government's focus continues to be on highway and water sector. And as a part of National Infrastructure Pipeline announcement, which really present excellent business opportunities in the next few years, is our view. The company is focused on selective bidding and targeting to explore business opportunities while preserving its threshold return expectation. In the water sector, we will continue to focus mainly on sewage treatment plant, desalination, and bulk water transmission projects, either through EPC mode or HAM mode. The company will continue to explore inorganic growth opportunities through measured evaluation of risk return parameters. The company will continue to pursue an asset-light model while focusing on operational excellence and prudent risk management. We will also continue to focus on value unlocking through divestments and or refinancing of projects, and so that we remain focused on our asset-light model. With these words, I will now hand over the call to Mr. Akhil Jindal for financial highlights. Over to you, Akhil.
Thank you, Sandeep. I would compliment Sandeep on the kind of growth that he showed despite some of the challenges. And however, because of some of the issues that he mentioned about the extended rain and a bit of a COVID, the revenue was down from a YOY perspective, although on an overall basis, we still achieved our objective. It was down 37% to almost 450 crores. But importantly, the EBITDA, was down by 32% against 37% of revenue. In fact, our operating margin for the first time stood at almost 13.5%, which used to be 12.6%, in the corresponding quarter last year. So clearly an improvement in the EBITDA, but a little bit of a setback on the revenue side and corresponding effect on the EBITDA side. And as a result, the EBITDA on the overall basis was down 18% to rupees 74 crore. While these are the numbers which are more like historical numbers to us, and clearly the business going forward will cover up many of these numbers because all of these projects are in-house projects. So some of these revenue numbers which could have been achieved in Q4 are going to be achieved in the subsequent quarters. So these are more like a deferment rather than loss of business permanently or completely. So to that extent, I think there is a jump in this financial year that we will see on account of the last year's shortfall in the revenue. The important thing is that the company is fully geared to meet its obligation and to also have enough cash and bank balance to meet the further requirements and to capitalize on the opportunity that may come through. So as on 31st March, the cash balance was nearly 532 crores. Additionally, as Sandeep was mentioning, we have raised 375 crores in the last few days. In fact, yesterday was the last payout. So today the company has got 375 crores and NCD at a very competitive rate. So together with 375 and 572 as the last year balance, we are talking of a fund of almost 900 crores. Additionally, you must have seen our efforts, which are going to be more clear as we go along, to raise further equity capital in the range of 250 to 300 crores that we are contemplating. So all in all, there would be a healthy balance of 1,000 to 1,200 crores to meet our further requirements and to look at the other projects. When we visualize the pure equity requirement in some of our existing projects, we have almost 450 crores required immediately. Some of them in the HAM projects, which were historical, where some significant work has been done and part equity is left to be infused. That is around 135 crores. The recently acquired boot project that we mentioned as Mukarba Chowk, there the pure equity requirement is 200 crores. And then the oil and gas, which is a third business or a third leg of 150 crores. So if you see against our 1,000 crore of cash kitty that we are trying to create, 450 crores is the immediate requirement in many of these projects, plus some other fund use that we can plan. So to that extent, I think there is enough gunpowder with the company to capitalize on any opportunity. We have got a short-term loan of 277 crores as on March number, which has again significantly come down while we are talking. But these are of course supported by the net current assets and everything. So there is no challenge in terms of the current assets versus the current liabilities chart. And to that extent, the current assets are adequately sufficient. They were almost to the range of 1,700 crores, including the cash, of course, which were supported by the cash, and accordingly the short-term loan of 277 crores is a very small number against that. So if you see, we have continued on our journey of growth. Operational excellence has been our DNA, and we have now got a portfolio of almost 10,600 crore, including the last project that we acquired, which Sandeep mentioned from SL. The company is really focused on value unlocking. There is, of course, recycling of capital that we are contemplating. Now, since our one project, which is Delhi Meerut, is near to its 2 years completion, 2 years post completion, this is the right time for us to start looking at the unlocking there, and many more projects which are going to be commissioned in this year. So of course we are now getting geared where the completed projects will be unlocked as we go along, and many of the projects which are under various stages of implementation, the efforts are to expedite them to complete it. So I think with this I hand over the floor for question answers. Myself, Kevin, and my colleague Mr. Sridhar, we all three are available for any financial questions, and Sandeep and of course supported by Binu are available for any operational and other strategic questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who wishes to ask a question, you may press star and one. First question is from the line of Mohit Kumar from IDFC Securities. Please go ahead.
Yeah. Good afternoon, sir. Sir, primarily I have three questions. So first is on the fact that the GSY, CGRG, and Chikli Taso. I think my question is whether all these three will get completed in this fiscal year, or do you think there's some delays possible in one of them and they get postponed to FY22? And how much leeway we have got by NHAI? Is it for 6 months? And secondly, on this Mubarka, the Panipat, the tollways limited, which you have acquired from was there any consideration to pay it? What was the process? And I understand that, as you told, that the equity requirement, the total equity outgo from our side is 200 crore. Is there anything else which we need to pay, or which we need to invest in this particular project? And what is the kind of the timeline where you expect this project to get complete? And are there pitfalls, are there any risks which we are not which you can tell us in this particular project? And thirdly, on this order inflow, how do you see the order panning out from NHAI for HAM project, and also the water side, if you can throw some light.
Thank you. I will take this call, Phil. So the first question that you have is on the CGRG, GSY, and CTHPL. Do we see these projects getting completed in FY21? The answer is positively yes. The two projects, that is CGRG and GSY, should have achieved their PCOD by the March, but for these rain and the COVID intervention. So we expect somewhere around July these projects to be completed, at least achieve the PCOD. The COD may be slightly ahead of 90 days. The other project, CTHPL, will definitely achieve its PCOD within this financial year. The COD is expected, provided NHAI is able to hand over certain lands within this year. So we expect all these three projects to achieve the PCOD and COD this year. In addition, I think we are also reasonably confident that the Amravati project will also achieve the PCOD and the COD in this financial year. So we'll have 4 projects which will achieve the revenue generation point in this financial year. Now, coming to your second question about the acquisition cost of Panipat Mukarwa Chowk, we have not paid anything to SL for acquiring. This is an harmonious substitution wherein we have taken over the debt, the past debt of the project, and we are likely to complete the project going forward. In terms of the risks, there are practically, other than the construction risk, which is a part and parcel of the business in the current situation of COVID, I don't see that this project has any challenges. The land is available for us to get the PCOD. We need to complete only the Haryana section to get the PCOD. We can complete this section subsequently to get complete COD. So I don't see any risks other than the normal business usual risks on this project. It is a very prominent entry point into Delhi, so it's a very prestigious project as well. So in terms of the positioning, Sorry.
Your voice is breaking slightly.
Okay. So I will repeat. As far as the Panipat Mukarwa Chowk is concerned, other than the risks associated with any construction project, I don't foresee any risks on this project. And to give you an idea, for us to complete this project to the level of PCOD, only Haryana section is completed. It should be able to achieve its PCOD. So we are practically very hopeful that we will be getting the PCOD in this financial year. However, the complete project may take H1 of FY22. Coming to the third question, that how do we see the NHAI's awarding on HAM project? The reality is that currently there are about 42,000 crores worth of bids on HAM. And if the public domain information is to be believed, the client is clearly focusing on PPP projects rather than the EPC projects. So there is, we don't see any challenge. We expect something like about 4,000 to 5,000 crores of orders to be out there in FY 2021, which will amount to about 1 lakh crores. And we estimate about 60% of this new order flow to be from HAM. I hope I've answered all the three questions.
The last question was this partly on the water research. Have you heard are there any orders in the market right now?
So as we speak, there are currently about NCGM is out there with about 12,000 odd crores of projects. There are about EOIs of about 12,000 crores in AP, and there are various another project of Marathwada, which is another 12,000 crores. So from our canvas, see, the water is a very large business. So there are at any given point in time, there are at least 20, 30, 40,000 crores of work floating at various states or municipal levels. However, from the canvas that we are interested in looking at, it is large projects where we can bring in a differentiated value. Currently, in various stages of EOI stroke actual bidding, there are something like about 30,000 odd crores of projects which are under contemplation with us.
Last question, if I may squeeze in, sir. Is there any clarity whether this force majeure is the political force majeure or indirect, or not political, and will not be compensated for any additional cost? Do you think there is any chance that we get compensated for some of the costs which might come in because of the delay?
So let me answer this question in the best manner that I can. If you are looking for the words political force majeure, I have not seen any memorandum or the directive of the government which says it's a political force majeure. However, if you look at the intent what they have done to the BOT projects of saying that they are going to extend the collection period by so and so period, and this is how they will compensate. So all those provisions which are applicable to political force majeure are included in that document. So to answer the question, the intent of the government is very clear. They don't want the industry to take the hit. If the BOT projects are any indicator. However, I'm sure as the time will evolve, in addition to statement that they have made that 3 to 6 months of extension will be granted, I'm sure that clarity will come in post the lockdown and when the interactions between the industry and the NHAI stroke more to become more vibrant and face-to-face.
Understood, sir. Thank you, sir. Thank you and best of luck.
Thank you. Thanks a lot.
Thank you very much. Anyone who wishes to ask a question, you may press star and 1. Next question is from the line of Sagar Parekh from Deep Finance. Please go ahead.
Yeah, sir. Thank you for taking my question. So firstly on this, there were 2 orders of MCGM that we had bidded for the sewage treatment plant. So it was, I think, 2,000 crores each. What is the status on that? Have we won that orders or it's still under bidding?
So those tenders got cancelled and the re-invitation has taken place. Right now, the pre-bid for those re-invited tenders is likely to take place post the lockdown.
So the 12,000 crores that you mentioned for MCGM includes these projects, right? These two projects.
Yeah, the earlier bidded projects are included there.
Okay. And would you like to give any kind of order inflow guidance for FY21?
My views are obviously we have our internal targets. But however, given the overall situation in terms of the industry, I would want to wait till I give a guidance going forward, because how the whole thing unfolds as well at the government level also needs to be seen as to how many projects they will be able to take it through the EPC route.
Fair enough, but even this 42,000 crores of HAM project, there would be some kind of visibility for us, maybe get one or two orders or something. Even in the water side, we would have some orders bidded.
So to give you an idea, yes, we would definitely be bidding for projects out of these 42,000 crores of project, and expect at least a couple of projects to be won from the road project. The way we will approach the project is that we need to meet our threshold return expectation. However, otherwise, there are enough stressed assets available in the market which allow us to continue to improve our order book and turnover. So there is no reason for us to just focus on the bidded projects, because there are enough opportunities in the secondary market also to pick up.
So coming to this stress project that you mentioned, this SL project, we have taken it at, there is no haircut on the debt, right? In that project, it has its basis, right?
There is no haircut on the debt. There is a haircut on the equity.
Okay. And so just taking this forward, basically, we are talking about 300 crores revenue from that project, and it's a 2,100 crore project. So, and possibly about 11 years, right? So, what kind of IRR? Because if I calculate just 300 also, I mean, on a full year basis, that comes up to about 3,300 crores of revenue for the next 10 years or 11 years, and we have paid 2,100 crores in total, right? So that's about 1,300 crores of incremental cash flow for us. Am I right in my understanding?
I don't think we can do that maths so easily, because there are three things that you need to understand. That for us, the project has, in addition to the debt that is being taken up, the future project is valued only at about 1,600 crores. Secondly, the traffic also grows as the time evolves, and there is a WPI CPI linked increase in the revenue as well. So to give you an idea, the project will, we expect the project to have a 15% IRR post the completion.
But this 300 crore number is sacrosanct, because there can be a downside risk to that as
well. This is the major artery into connecting the north side to the Delhi. I don't think that this project has a risk of traffic. Nonetheless, there is an inbuilt security in the concession that in 2025 revenue will be seen, and if the traffic is below a particular set point, the concession period will be extended accordingly. So there is a inherent contingent measure given in the concession. So there is not a risk in terms of any revenue loss.
Fair enough. And on this oil and gas side, when can we expect the revenues to flow into our P&L, and what kind of initial estimates do we understand for oil and gas?
So oil and gas.
Sorry to interrupt you. Your voice is not so clear. May I request you to repeat the question once again?
Yeah. Is it clear now?
A little bit.
Yeah. Hello.
Yes, go ahead. Much better. Thank you.
Yeah, just wanted to know on this oil and gas front, what can be the revenue of first year revenue, and when can we expect the revenues to flow in?
So one step at a time would be my guidance on oil and gas. So first we need to do these two wells to convert the resources to reserves, which is what we are trying to do, and we will be knowing the results by March of 21. We planned it pre-monsoon, but for the COVID situation, the whole program is deferred by 6 months because COVID and then thereafter the monsoon, so we could not have spud a well during this phase. So the gas reserves, as I said, are about 0.9 TCF or 900 BCF. Now, in terms of the 900 BCF at about $4 for an MMSCMD, the valuation of the resources will be somewhere close to something like about 6,000 crores. So that's what the numbers are. So numbers are huge. I don't want to give any false expectation here. So one small step at a time would be my suggestion, and we would want to first convert the resources into reserve, and once the reserves are proven, then we would want to convert them into the revenue and the return expectation.
So nothing below, yeah. Sorry.
However, I would want to add that given what we know about these blocks, we are reasonably confident that not only the current investment but also the past investments are in the most likely situation secure.
Thank you. Sorry to interrupt you, Mr. Parekh. We have requested to come back in the question queue for a follow-up question. Thank you. Next question is from the line of Rohit from Antique. Please go ahead.
Yeah, thank you for this opportunity. Hello, am I audible?
Yeah. Please
Yes.
go ahead.
Sure. So I had this, you talked about some divestments or maybe value unlocking mechanism that in the initial remarks. I understand that Delhi Meerut is probably one of those assets that becomes pre-qualified. But we also understand that this sector is facing some headwinds in terms of the returns of all these HAM projects which are linked to bank rate plus 300 basis point, and they are currently lower than typically the project debt cost. So would it impact the valuation? What is your observation on that?
Akal, would you want to take it, or would do you want me to?
Sure. No, Sandeep, that's I can. No, you're right. Absolutely, the sharp fall in the bank rate, which has been driven by the government's response towards this COVID in the last two announcements that the government has made, has been quite sharp. In fact, before that, our NHA cost was around 8.4. I mean, the revenue that we would collect from NHA was 8.4. And our borrowing cost was around 8.5 for the Delhi Meerut. So we were almost at par in line with what was there. Now, of course, since the two announcements that had been made, which has been 75 bips and 40 bips, naturally this 115 bips reduction has not been something that the lenders had been able to pass on. Maybe they have passed on like 30, 40 bips. So there is a 75 bips difference which has got created because of this sharper fall, and we are aware of this, and we are in discussion with the lenders to sort out this issue. But I think in the projects where there is a right bidding and the right O&M cost which has been accounted for, and I'm sure this gap that you are seeing today will not remain like a gap forever, because ultimately, the interest will correct for itself, and it will start affecting with a with a certain time lag effect. This margin. We believe that at any point of time, our bank rate equivalent of NHAI and our lending rate will be more or less, few maybe 25 basis point here and there to each other. Anything over and above that would be a little artificial, which, in our opinion, at least, will be corrected shortly. And we are anyway talking with the banks for the refinancing and to kind of for this thing. To reduce their interest rates. So I believe that till that is done, there is a bit of an anomaly, but as I mentioned, at least in our mind, this is a little temporary. Sandeep, you want to add on something to this?
No, I think the other thing that I would want to add is the government is fully aware of the situation and they are also trying to find solutions because this is not a company-wide but a country-wide issue, and there are a lot many hand players. Almost 1.5 lakh crores of the orders are ongoing, and I think the resolution is likely to take place soon.
Sir, my question is more on when you sit with the new buyer, would you be resetting your expectations in terms of valuation, or would you want to stick to, at some premium to the invested amount that you are seeking for? How is that approach from a management perspective that you have?
So to put it in the perspective, even we are industry people and the buyers are industry people. Both are aware that this anomalous situation is not going to continue for a long time. Something is going to correct. So both are taking a conscious approach of reconciliation rather than picking up pedestal and standing on those. So the deal has to be done. Those deals will take place, and I don't think any substantive valuation will take place because of this. Everybody takes a long view on it rather than an immediate, right now, right here view.
I understand, sir. Sir, now coming to this project, labor availability, we have been hearing that is a major challenge. I also learned that you have given some PCOD targets for some of the projects. But sir, what is the labor availability in some of these critical projects, especially Anta Samaria, AM2? How is the company tackling these labor issues as of now? Do you face such an issue?
So everybody is facing the countrywide that there is a labor migration taking place. We expect the labor migration to be taking place for next few months. However, it will stabilize. And as I said, Q1 is going to be a bit of a challenge. So I expect the operating manpower availability to be anywhere between 35 to 50% on project sites. However, post the monsoon, I expect the complete workforce to be back on all project sites. So this is going to be a phenomenon that we will face for another this quarter and most probably in some portion of the next quarter.
Okay, sir. Thank you, sir. And sir, I've heard something on oil and gas, especially we have been hearing about this pricing of natural gas has come down drastically. What is the break-even price that you would require in your fields in comparison to what is prevailing in the market? Is there an impairment of this asset risk that you see, or how exactly is that the IRRs work out over there?
So let me answer this question in twofold. Is the current gas pricing causing a concern to us? The answer is no, because what it means is that our cost of doing the wells will get reduced because the industry can support us. In any case, we do a very low cost based viability of the project. So we have done a viability of the projects at $4 per minute community pricing.
Sorry to interrupt you.
Sorry?
So once again, we are losing the audience, sir.
So we have priced the gas at around $4, and we are pricing the liquids at $30 to establish our viability. So we do not see any viability issue, and there is if we see it under all likely circumstances, irrespective of the gas pricing, until it becomes close to zero, which is unlikely to happen, the assets remain public.
Sure, sir. That's it from my side. Should there be any other questions, I will get back into the queue. Thank you.
Thank you very much. A request to all the participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue for a follow-up question. Next question is from the line of Nirav Shah from GC Holdings. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. Few questions. Firstly, on the acquired project, the BOT1, how much is the debt we are assuming? I mean, from the takeover.
Yeah, so the total project cost, the debt is in the range of 1,200 crore, out of which around 550 is already disbursed to the company. So we are taking over that 550 crore, and the balance 600 odd crore, 650 odd crore would be disbursed in line with the construction schedule of the company.
Got it. So the second question is, independent engineer for GSY and CGRG, they had given us some extension, and we were waiting for the final approval for that extension of construction period. So has that been approved, and based on whatever the revised timelines are for completion, is there any likelihood of we receiving any early completion bonus?
So, no, not really. There are no early completion bonus granted if the project is behind the agreed schedule of completion, no matter whether it is because of the delays by NHAI or otherwise.
Okay.
So it is not likely to be earning any early completion bonus, but we will complete before the revised schedule completion is proposed by the IE, is what we will be satisfied with.
Got it. And just the last question on the Antasamari execution. I mean, till date we have completed around 21%. Any particular issues or this project is facing for slow execution? Because last 3 quarters, I mean, we have been executing only 3% of the total project cost per quarter.
So let me put the issue in perspective. The project is primarily a bridge project, and we are working only on the bridge section of the project. So we did not get 48% of the land, which is holding us from doing the land portion of the work. So initially, if you look at it, in the bridge section, you are only working on the bridge or the foundation of the bridge. The major of the progress is coming from road works to the approach with this project. However, that whole project.
Hello.
Ladies and gentlemen, please stay connected. The line for the chairperson dropped. Ladies and gentlemen, please stay connected while we join Mr. Garg back to the call. Ladies and gentlemen, thank you for your patience. We have Mr. Sandeep Garg back to the call. So please go ahead.
So the challenge is because the road is not available for the Antasamari work to progress. The progress is only taking place on the Ganga Bridge. And since we are only working on foundation, the progress is going to be low. Once we start working on superstructure, the progress will pick up. We also expect the solution of the balance land to take place in the next 3-4 months. So post the monsoon, we expect the full-fledged growth or full-fledged progress to take place on the project.
Got it. Great, sir. Thank you, sir, for answering the questions, and all the best.
Thank you.